Most S&P 500 stocks finished higher today. The index still fell. That sounds impossible until you look at how the index is built. The S&P 500 closed at 7,652.86, down about 0.3%. But the equal weight version finished slightly higher, and 8 of the 11 major sector funds rose. So this was not a simple market-wide sell-off. It was a split market, where the biggest companies had enough weight to overrule the typical stock. Here are the 3 receipts that explain it. First, the headline board. The Dow gained about 0.3%. The Nasdaq lost 0.8. The S&P 500 lost 0.3. Now compare 2 versions of the same broad large cap universe. SPY, the cap-weighted proxy, fell 0.2938%. RSP, the equal weight proxy, gained 0.1173%. Associated Press also reported that the majority of S&P 500 stocks rose. We do not have an exact count, so majority is the honest limit. The mechanism comes directly from S&P Dow Jones indices. The S&P 500 is weighted by float-adjusted market capitalization. In plain English, the companies with the largest publicly available market value move the index the most. The equal weight version gives each company the same weight at its rebalance date. So the 2 indexes answer different questions. Cap weight asks, what happened to a dollar invested across companies by size? Equal weight asks, what happened when every company started with the same influence? Today, those answers pointed in opposite directions. The pressure was concentrated in technology and semiconductors. Nvidia fell 2.9%, and Associated Press called it the heaviest S&P 500 weight for the session. Micron fell 5.8%. Broadcom fell 2.6%. XOK lost 1.7784%, and SOXX lost 2.6671%. Yet 8 sector funds rose, led by consumer staples, financials, and utility. That does not prove one universal investor motive. It proves the red headline hid broader participation underneath. The next check is not a prediction. Watch whether equal weight keeps outperforming cap weight, and whether semiconductor weakness persists before Nvidia reports earnings on Wednesday. If RSP remains firmer while SPY and technology stay weak, concentration is still dominating the headline. If the gap closes, the market is broadening back toward one direction. Friday also brings Fed Chair Kevin Warsh at Jackson Hole, another event the market was waiting for. The lesson from today is simple. Never let one index close answer a breadth question it was not designed to answer. Evidence first, then interpretation.